What if the next crypto bull run doesn't start in the usual places, like the US or Europe, but instead in Japan? For years, Japan's crypto market has been a cautionary tale, burdened by strict regulations, high taxes, and the shadow of Mt. Gox. Yet in 2025, something remarkable is happening. Japan is rewriting its crypto narrative. Could this be the comeback that sparks a global market surge? Recent policy overhauls, tax reforms, and a newfound focus on Web3 are setting the stage for a massive revival. Imagine what could happen if Japan reclaimed its spot as a leader in the crypto world. For investors and developers, this could be the opportunity they've been waiting for. But let's not get ahead of ourselves. Can Japan shake off a decade of cautious policies and fully embrace the innovation driving today's crypto market? With players like Binance eyeing the country and the potential launch of USDC within its borders, all signs point to a transformative year. Welcome to the Chainpoint channel, whether you're a seasoned investor or a curious observer. Japan's crypto resurgence might just hold the keys to the next big wave. Let's dive in and find out. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening on the crypto world. And remember, everything we say here is not an investment advice. Always invest wisely. Let's get started. For years, Japan's crypto market seemed like a shadow of its former self, stifled by rigid regulations and high taxes. Once the global leader in BTC trading volume, Japan's prominence dwindled as other nations embraced innovation. But change is in the air. Recent moves to loosen crypto laws signal a new chapter, one where Japan aims to reclaim its spot as a key player in the global crypto ecosystem. This pivot isn't just about policy, it's about reigniting trust and attracting global investors. Consider this: Japan once handled 70% of the world's BTC trading volume through Mt. Gox, proving it has the infrastructure and appetite for large-scale trading. By revising tax laws and easing exchange restrictions, the government is setting the stage for a market revival. For traders eyeing a foothold in Asia, Japan's resurgence could be a golden opportunity. The implications of these changes are massive. Imagine a future where Japan's crypto market rivals that of the US, backed by Web3-friendly policies and a renewed focus on innovation. The country's plan to attract international exchanges could catalyze a flood of capital and expertise, making Japan a hub for blockchain development. If you're an investor, now might be the time to start monitoring Japanese exchanges and yen-pegged stablecoins like JPC and GMO Trust's GNIN. But it's not all smooth sailing. Rebuilding a tarnished reputation takes time, and competition from established global platforms like Binance won't make it easy. However, Japan's unique position as a tech-savvy nation with deep financial roots gives it a competitive edge. The question is, will the market embrace these changes quickly enough to capitalize on the next wave of crypto innovation? The story of Mt. Gox is both a cautionary tale and a defining moment in crypto history. In the early 2010s, this Japan-based exchange was the epicenter of Bitcoin trading, handling an astonishing 70% of global BTC trading volume. For a brief period, it seemed like Mt. Gox was invincible. But behind the scenes, mismanagement and lax security were ticking time bombs. When the exchange collapsed, losing 1.5 million BTC to hacks, the fallout shook the entire cryptocurrency market. Imagine this: an exchange holding the equivalent of billions today vanishes overnight. For investors, it wasn't just about losing funds. It was about losing faith in crypto's security. This single event set the industry back years, forcing regulators worldwide to step in and tighten the reins. In Japan, Mt. Gox's failure marked the start of a decade of restrictive policies. These regulations, while aimed at preventing future disasters, also stifled innovation and drove local traders to offshore platforms. Despite its catastrophic impact, Mt. Gox taught the crypto community invaluable lessons about risk management. It highlighted the importance of diversification, not just across assets, but also platforms. Modern exchanges like Binance and Coinbase now prioritize security, offering insurance against breaches and transparent operations. Yet, the memory of Mt. Gox lingers, a reminder of how quickly fortunes can turn in the crypto world. Japan's journey through crypto regulations has been a double-edged sword. Following the Mt. Gox debacle, the government introduced stringent rules that aim to protect investors. While these measures reduced risks, they also created significant barriers for local innovation. For years, Japanese exchanges offered only a limited selection of trading pairs, falling far behind global competitors like Binance. This constrained environment pushed traders and developers abroad, leaving Japan struggling to keep pace with the rapidly evolving cryptocurrency market. High taxes compounded the problem. Unlike the 20% capital gains tax on stocks, crypto earnings in Japan were taxed at rates as high as 55%. This made trading far less attractive, particularly for high-frequency traders and institutional investors. Imagine earning substantial gains only to see more than half of it go to taxes. It's no surprise many investors sought friendlier markets overseas. Japan's restrictive policies, while well-intentioned, inadvertently turned its crypto ecosystem into a shadow of its former self. But the impact wasn't just local. As traders left for offshore platforms, Japan's global market share dwindled. The yen's dominance in BTC trading dropped, overshadowed by the dollar and even the euro. Yet, despite these challenges, Japan remained a significant player, with the yen still accounting for 9% of BTC to fiat transactions globally. This resilience suggests that the market's potential wasn't entirely erased. It was just waiting for the right conditions to thrive again. Now, with recent reforms aimed at aligning crypto taxes with stocks and easing exchange restrictions, Japan is setting the stage for revival. Analysts predict that these changes could channel up to $130 billion back into the local market. It's a bold move, one that signals a shift from damage control to proactive growth. The question is whether these reforms can rekindle the innovative spark that once made Japan a crypto powerhouse. Stablecoins have become a cornerstone of the global cryptocurrency market, but in Japan, their growth has been anything but straightforward. The country's stringent regulations have stifled the development and adoption of stablecoins, even as yen-to-crypto trading remains a dominant force worldwide. Local stablecoins like JPC and GMO Trust's Genin struggle to gain traction, with trading volumes on platforms like Coinbase often as low as $2,500 daily. This limited adoption underscores the uphill battle stablecoins face in Japan's regulated environment. One key challenge is profitability. Compared to US markets where stablecoin issuers benefit from higher yields, Japan's government bond rates range from just 0.27% to 0.95%. This yield gap makes it less appealing for companies to issue or hold stablecoins tied to the yen. Meanwhile, global players like Tether and Circle continue to dominate, leaving local projects to fight for relevance. For investors, this means fewer options and lower liquidity when dealing with yen-pegged stablecoins. However, Japan's position in the stablecoin market isn't all doom and gloom. The anticipated listing of USDC in Japan, slated for late 2024, could signal a turning point. A globally recognized stablecoin entering the Japanese market would provide traders with a reliable bridge between crypto and fiat, potentially boosting local trading volumes. If successful, this could set a precedent for other stablecoins, encouraging more global participation in Japan's crypto ecosystem. But for stablecoins to truly thrive in Japan, regulatory clarity is crucial. Current laws create uncertainty, deterring innovation and scaring off potential investors. As Japan revises its policies, the stablecoin market could become a critical area of growth, especially given the yen's global relevance. The next question is whether Japan can balance regulation with innovation to unlock this market's full potential. In recent years, Japan's government has taken bold steps to revive its lagging cryptocurrency market. Prime Minister Fumio Kishida spearheaded reforms in 2021, aiming to address the issues that had driven investors and innovators away. These changes included adjustments to Japan's high crypto taxes, which had once reached a staggering 55%. By aligning crypto gains taxation with stocks at around 20%, the government sent a clear message: Japan is open for crypto business again. Policy overhauls didn't stop there. The Kishida administration introduced measures to streamline exchange operations and encourage foreign crypto firms to enter the Japanese market. By reducing bureaucratic hurdles, Japan is positioning itself as a more attractive destination for global crypto players. For example, Binance has already begun expanding its presence in Japan, signaling confidence in the country's renewed commitment to fostering a competitive crypto environment. Web3 technologies are also a major focus of Japan's intervention strategy. Recognizing the potential of blockchain beyond trading, the government has invested in fostering innovation in decentralized finance, DeFi, NFTs, and real-world asset tokenization. These initiatives aren't just about boosting trading volume. They're about creating an ecosystem where Web3 projects can thrive. For developers and startups, this is a green light to explore opportunities in one of the world's most tech-savvy nations. But bold moves come with bold expectations. The success of these interventions depends on execution and timing. Can Japan attract enough capital and talent to kickstart its crypto renaissance? With global competitors like the US and Singapore moving quickly, Japan faces an uphill battle to reclaim its position as a crypto powerhouse. The foundation is being laid, but only time will tell if these efforts will pay off. Japan's crypto future is shaping up to be as exciting as it is ambitious. With regulatory reforms underway, the country is positioning itself as a potential global hub for cryptocurrency and blockchain innovation. Analysts predict that changes like the reduced crypto tax rate could channel up to $130 billion back into Japan's markets. This level of capital influx could reignite speculative trading, attract international investors, and boost the yen's already significant share of global BTC trading volume. One of the most promising developments is Japan's focus on stablecoins and Web3 technologies. The anticipated entry of USDC into the Japanese market later this year could revolutionize how local traders interact with crypto. Paired with policies that encourage tokenized assets and decentralized applications, Japan is creating an ecosystem ripe for innovation. Of course, challenges remain. The global cryptocurrency market is fiercely competitive, with nations like Singapore and the US making significant strides in their own regulatory frameworks. Japan's success will depend on how quickly it can adapt and execute its new vision. If the country manages to leverage its tech-savvy population and deep financial roots, it could reemerge as a crypto powerhouse, competing on equal footing with global giants. The stakes are high, but so is the potential reward. Japan's proactive approach is a stark contrast to its past decade of caution. By embracing change and fostering innovation, the nation could transform its crypto market from a cautionary tale into a case study in resilience and reinvention. Japan's crypto resurgence is more than just a comeback story. It's a glimpse into what's possible when innovation meets reform. With tax changes, regulatory shifts, and a focus on Web3 technologies, Japan isn't just reopening its doors, it's building a new future for the cryptocurrency market. What's your take? Is Japan ready to ignite the next bull run, or is it still finding its footing? Drop your thoughts in the comments. We'd love to hear from you. And if this deep dive opened your eyes to new possibilities, make sure to subscribe and turn on notifications. The crypto world evolves fast, and staying informed is your best edge. Let's navigate this journey together and see where Japan's bold moves take us next. And I will see you in the next video.